Let's bring in a very special voice. Aditya Puri is Managing Director at HDFC Bank, the longest serving bank CEO in the country. Mr. Puri, great to have you with us. Great that you could join us, take our time. Prashant this side. I want to start by asking you what viewers want to ask you, what account holders want to ask you. When will more of the RBI rate cut transmission really take place? I know it's a subject that you've explained earlier on a different occasion, but it's right there in the top of the minds for most people.
No, I don't think so. If you followed what everybody has been saying, including the governor and the finance minister and the banks, what we've been saying is as the cost of deposits come down, transmission will come, and cost of deposits are a function of providing a real rate of interest over and above inflation. So we do believe that there is scope for further reduction, and you will see much faster transmission going forward.
You know, it's a circular loop in a way, because the RBI has said it put three conditions. The first condition for it to cut rates more from here was that monetary transmission happens. Now, some transmission has happened with banks cutting rates, banks like you. So, do you think on the 2nd of June, RBI will feel that they have the room with some transmission in the system to ease the repo a little bit more?
I think you will see both. I can't predict when we would expect a rate cut from the RBI, but I can definitely say that the trajectory for interest rates is down, and you should see it in the next 3 to 4 months, with or without a rate cut from the RBI. And if there's a rate cut, you would probably see a further reduction.
You've said on occasion and recently as well that cost of funding, which means cost of deposits, has to go down more. Are you suggesting that we are on the verge of seeing a second round of deposit rate cuts across banks in the system?
Yeah, I think people are willing to save in the bank. Deposits are starting to grow. Obviously, both the growth rate of credit as well as deposits is a function of, if you really look at the individual savings of the people, the deposit growth in the savings accounts has been good even last year. So when you talk of deposit growth, you're talking about a combination of savings and current account. When the economy is slow, by definition, current account will fall. So as the economy picks up, you should see an increase in the overall rate of deposit growth. But the deposits from the individual savers have always been good.
Is there a competition between instruments like the PPF, liquid funds, etc., as against bank deposits like FDs?
No, I think the concern that they're affecting is that there must be a rational structure of interest rates across the spectrum of the economy, and so and that should be based on providing a real return on inflation. And anywhere where that structure is violated, you will create dichotomies which are not good.
Okay, you know, we got the latest credit growth numbers for the banking system as a whole, and we've seen a bump up about 12.5% for the last fortnight, for which we have data, compared to 9.5% the previous one. How do you see this? Because if you break it up, look at the disaggregated numbers, retail remains pretty steady, industry is pretty poor.
Oh yeah, absolutely. I think if you see today's newspapers, commercial vehicles are up, auto sales are up, industrial production is up. By and large, things are moving up. So we can safely say the bottom is behind us and the economy is on an upward trajectory. Globally, India is expected to outperform. So we are very, very positive about the future. But I think you shouldn't put too much expectations in the short run. As long as you have a clear policy, we don't have a current account problem, a fiscal deficit problem, a government decision-making problem, and we've got policies, stroke plans in place for what needs to be done, I think India is a bright spot in the global economy.
Yeah, you know, but despite all that, right, which is working well and is good, we are not, forget fresh capex, we are not even seeing meaningful commitment towards fresh capex. Why is that, do you think?
There's a natural process. First, working capital as well as consumer demand will pick up. Once they see that, then people are looking at projects, then you will see the projects come into place. And then there's a gestation period before the project hits credit demand, which is 12 12 to 15 months, and that process has to be followed. So if you expect the delta, and that's the projections that the finance minister has also made. So when you see 7.5 going to 8.5 thereafter, the delta is caused by sentiment converting into reality, which is the normal gestation period on investment. And that's the delta on investment.
I know it's a broad question, but for the banking sector, what are the key, I mean, do you think directionally fiscal 16 is looking a lot better than fiscal 15?
We all along have been saying we are very confident about the country, we are confident about the policies, and we are very optimistic about the future. And I see no reason to change that.
But what are you looking for in terms of triggers for fiscal 16?
I wouldn't say a lot, but are we seeing an uptick? Yes, I think the auto fellows shouldn't be seeing it. They've seen an increase. Some of the consumer durables have seen an increase. HCV has seen an increase. We are seeing increase in personal loans. The employees are seeing increments. So I think it's picking up.
All right, Mr. Puri, thanks very much for that. Great speaking with you, and appreciate you coming on with that perspective. It's always a pleasure, sir. Mr. Aditya Puri, Managing Director with HDFC Bank there with his thoughts.